Hi guys, how you doing? This is Led Freedom Ring coming at you. Hopefully going to kick you some knowledge. Back in the car doing some driving around. I'm gonna start doing these in the house though, pretty soon. Anyway, I wanted to do a video a little bit, not so much off subject, but I am in the real estate industry. I'm a licensed real estate agent as well as a licensed mortgage loan officer. So I'm a real estate pro. Make a long story short. So the biggest question I get nowadays is what's happening in the market? What's happening with interest rates? Should I refinance? What should I do? Well, it really kind of depends on what your goals are over the next several years, maybe long term. It really kind of depends because you got to kind of look at it this way. Well, let me go back to what I was talking about. Um, so what's happening in the industry, in the mortgage industry, is we are seeing some retraction as far as staff. We're also seeing some companies just getting out of the business altogether. Several have just closed up shop and they're done. They're not going to be in the mortgage business anymore, at least on the retail, wholesale, or on the residential side of things. So, and then they're laying people off. They've been doing that for like the last 6 months. So that should tell you something. Now, this isn't something you're going to see in the news. Okay, this is only really people in the industry. Only people in the industry are going to see this. Okay, there was one particular lender that was a pretty good sized lender. They merged with another one. Okay, so that kind of tells you a little bit about what's, I guess they would call it inside baseball, but what's going on within the industry. It's retracting. It's getting smaller. There aren't as many lenders as there used to be, and I think that's going to continue. The other thing too is, in the last few years, it's been relatively easy to, relatively so, qualify for a mortgage. I'll give you an example. People that I would maybe could just maybe a year ago, maybe 6 months ago, I would have been easily been able to qualify for, a home loan with maybe just 3 to 5% down. Well, those requirements are becoming more and more stringent. Lenders are getting more and more picky about who they lend to. So it's tougher getting people that were what we would call qualified buyers just 3 to 6 months ago are now getting turned down, or they're being asked to bring more money down in a purchase transaction. The other thing too is interest rates have gone up quite a bit. I mean, it wasn't that long ago, maybe a year ago, that I could provide somebody something in the mid to high twos as far as interest rate, in the threes as far as interest rate. Now I've been quoting people 7 1/8, 7 1/4, 7 1/2, just depending on what their portfolio or what their profile looks like, I guess you can say. That's a massive jump, and what that does is, even though you may still qualify, it's going to affect your buying power, because a payment at like 2.75% versus 7.5, that's going to be a considerable jump. Okay, it used to be like you would pay like $400, just to say as a rough rule of thumb, you'd pay $400 for every $100,000 that you'd be borrowing. Now you're paying $600-700 for every $600-700 for every 100,000 that you're borrowing now. Well, that's going to affect what you can buy. People that maybe just a few months ago they were looking at houses in the $650,000 range. Well, now they're looking at $550,000, $500,000, maybe even $450,000, maybe even lower. And then in some areas that essentially prices you out of the market. You can't buy. There's no houses for those prices in certain areas. Now, I know I'm talking about some big numbers because I'm talking about California, and also Arizona. Here is, even though we're not in California, in the area that I'm in anyway, it's getting to pretty close to California numbers. It's still cheaper here if you compare apples to apples back in California here, but still, I mean, it's there aren't as many buyers that qualify, and then there aren't as many buyers. There just aren't as many applications coming through the system right now. Now obviously affects real estate agents. Okay, because now there are less buyers. So now it's become more of and there's still a pretty good amount of sellers out there. Just a few months ago, sellers pretty much commanded the market. They get well over asking on each and every deal, and they wouldn't have to, fix things, or they wouldn't have to give concessions on the deal. That was just a few months ago. Now, not only are sellers lowering prices, but they're also offering to pay for closing costs. Okay, because relatively speaking, the money's still pretty good for a sell. If you can sell in this market right now, you can still sell for a pretty good price. It's just not going to be as good as it was a couple months ago, and there aren't going to be as many offers. So if you get a good offer and it's at a good price and you're making, let's say a decent amount of profit, or you're well above what you purchased the property for, which is, like I said, still the case in a lot of markets, you should jump all over that right now. So the next thing, or what I would say the elephant in the room right now, is, are we looking at a market crash? I'm going to be honest. There are echoes here of 2007, 2008. Now, that doesn't mean that we're going to have a crash like that. I personally don't expect a crash like that, okay? But I'm going to tell you what is going to happen is the Fed is going to increase interest rates probably a couple more times by the end of the year, or at least in the near future. So what that's going to do is it's going to affect interest rates, mortgage interest rates. So we may be, we're already in the 7s. We may be seeing 8, 9, 10% interest rates. And I'm talking about, these are people with like 700 plus credit scores, maybe even a little money down. We're going to see that. Or it's possible that we see that. And that hasn't been seen in a long, long time. And the other thing that you got to think about is the short period of time that it's been since I could offer rates in the 2s to now I'm offering rates in the 7s, some cases even the 8s. It just, like I said, it just kind of depends. So how is that going to affect the market? Well, if you have less and less people that are buying and able to buy, and you still have a pretty big supply of properties, and on top of that, the foreclosures are starting to tick up. I wouldn't say a dramatic amount, but there's definitely a lot more foreclosures in the market right now than there were just a few months ago. So what does that point to? Well, if I was a betting man, which I'm not, but if I was a betting man, I would say that the market is going to continue to decline. In other words, house prices are going to continue to go down. How much? I don't know. 10%, 5%, 20%. None of it would surprise me. Do I think we're going to see 2007, 2008? It's possible. I don't think so, though. I was in the industry then as well. The lending was very different back then. The market was different, okay? But there are similarities, okay? One of the biggest ones is the inflation in price, okay? And some of that was artificial. So that's what concerns me about house prices. We're going to see what happens over the next few weeks, months. We were planning on purchasing a house about the beginning of the year when we first moved out here to Arizona, and we're not sure we're going to do that. I'm going to be watching the market very closely to see where we're at. Interest rates are continuing to go up. I expect them to continue to go up. And then the other thing that a lot of agents, a lot of real estate pros aren't going to talk to you about is you're going to see, not that there's a lot of this going on, but you're going to see like rent to own, what we call lease options, lease purchase, creative ways of selling and buying real estate. We're going to see an uptick in those. Now, most of the agents that you're going to deal with, if you mention these things, they're not going to have a clue. You really do got to find somebody that's very familiar. I just happen to be familiar with these because, heck, the last house that I lived in was a lease option, or at least started out as that way. So you're going to see a lot of investors get very creative because You're going to have people that 6 months ago could buy, can no longer buy, but these investors need to make money on their investment. They need a rate of return. They don't buy houses, not necessarily, to make them rentals necessarily, or to make them rentals, but they also want to get creative about selling them. So we're going to see, it's going to be interesting, I would say 6 months. Now, I know that the price of oil will continue, well, in my opinion, the price of oil will continue to go up, so gas prices will continue to go up in the long term. They're going down a little bit right now just because most of the governments in the world are tapping into their reserves, so they're artificially increasing the supply in the market, which typically makes prices go down, but they can't do that forever. So what does that mean? Well, that means if people have to pay more for gas, they have to pay more for food, then they may put off buying a house for a while. What's that going to do to the market? Well, quite possibly it's going to decrease the amount of buyers, which is going to have an effect on the value of homes and what sellers are able to sell them for. So it's going to be an interesting few months. Now, my market may be completely different than your market, and if you have people that are licensed in your area, real estate professionals like myself, you would definitely want to speak with those people, but you have to be very careful. Okay. A lot of agents right now, because look, agents don't make money. Loan officers don't make money unless they close a loan or they close on a real estate deal. Okay. That's just the nature of the game. So an agent or a loan officer is going to have an incentive to get you to buy or get you to sell or get you to take out a loan on your house or purchase a house. All right. I've heard a lot of bad advice. That this is the time to buy. It could be, but really what it boils down to is, what are your needs? If you say you have a family, and you need to get in the house, you need the room, you don't want to rent, then I typically tell people, well, look at what it costs to rent versus what you're buying. Home prices are cyclical, meaning they go up and down all the time. Okay. But if you're not planning on selling anytime soon, as long as your monthly expense is about the same for what you might be renting a similar property for, and it fits your needs, you may look at buying. If value or the price that you're buying at is very important to you, you may want to do a little more analysis on your market. You also need to find the right agent. Here's the other thing, guys. The agent, an agent is not the tell-all be-all. They don't know what's going to happen, okay? It's okay to tell your agent what you want to and don't want to do. If you feel pressure from your agent, get another one. Agents are dime a dozen. You can fire one. I mean, they'll get mad and say some different things. You know what I mean? Trust me. 90% of the time, there's nothing that they can do to you. Okay? You decide you want to fire your agent and hire someone else, go for it. All right? Because you're not paying the home mortgage, or they're not paying the home mortgage. You are. You're the one that should be making that decision and finding the very best agent that you can, that understands what your needs are. Okay? Best advice I could give you is, if you talk to an agent and they say the words, "This is the best time to buy," you may want to find another agent. If they're telling you similar to if they start asking questions like, well, what are your goals? What is it that you want to do? What are your needs? Then that's probably the agent you want to work with. Okay? But outside of that, it's my best advice that I could give you. It's going to be an interesting market. Now, me personally, I'm waiting. That should tell you something. Okay? I've been in real estate since 2003. I've been in lending since the late 1990s, starting with auto lending. Okay? And I'm not buying this market. Most of the professionals that I know, behind closed doors and out of earshot of their clients, they're not buying in this market. Completely anecdotal, keep that in mind. But that also should make you ask questions about your market. And the best thing to do is if you can find an investor in your market, those are the people you want to talk to because they're putting skin in the game. An agent isn't. They're just getting a commission based off of what you do. Okay? Anyways, guys, this is Let Freedom Ring. Hopefully this helps you a little bit. It is very important. Be interesting to see what happens. And I'll be sure to post more videos on this subject because I know it's of a lot of interest to a lot of people, outside of the politics and all the stuff that I talk about. All right, guys, Let Freedom Ring. Like, share, and subscribe. Semper Fi. Carry on.